Hi friends, Simit here from InformedTrades.com. Today is Monday, July 28th, 2014. Time for our daily forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to existing positions that I have on in the markets, all as a part of helping traders learn. This is live trading, real trading. All the trades are verified by myfxbook.com. You can find a link to my blog on InformedTrades.com that has all the trades documented, the track record verified by my FX book. And of course, a lot of the information I'm presenting, if it's unfamiliar to you, we also have a huge archive of learning material over on Informed Trades, articles and videos to help you learn, covering not only my style of trading, but many other styles, many other methods of markets. Check it out, share your knowledge. We can all learn together. Let's jump into the charts. Okay, on the screen right now is a chart of gold. Not much new for gold over the past few days. I guess the one thing that's interesting is we are now between the 50 simple moving average, or actually, well, 50 simple moving average is right here, this purple line, 200 exponential moving average is this green line here. We are between those two levels. We are also in the middle of the rectangle. Personally, I wouldn't trade this short term, or at least from the perspective of the daily chart. Long term, I'm very interested in accumulating now. Like I mentioned in some of the videos last week, there have been a number of cycle analysts talking about gold forming a major multi-year bottom on a cyclical basis, on the basis of cyclical analysis in July of 2014. Charles Nenner, Martin Armstrong both have suggested that, and I can sort of see that looking at it technically. I thought this might have been the low here in early June. But we might get one more dip. Either way, I think buying below 1330 is a great opportunity. Personally, I'm expecting the price to go well beyond its 2011 highs. So I think these are good levels to buy at. I'm certainly buying. Near term, though, we're between. I think the near-term support is 1290, where the 50 simple moving average is, and then the resistance near-term will be 1310, right where the 200 exponential moving average is. So pretty tight range. Often consolidation precedes a breakout, so we may be getting a breakout one way or the other over the next few days. That's gold. Bitcoin, big drop. We are now below point C. I think a downtrend is in place. We're now near support, though, so near point A of this ABC. Well, the pattern is invalid at this point. I'll probably delete this off the chart. In fact, I think I should do that now. The charts from TradingView.com, by the way, great charts. I love them. Free. Anyway, we are now at support. Like I mentioned, 550 or so, this black line, you could argue support, 567. With Bitcoin, I'm treating it like educated lottery tickets, the way I describe it. I entered at 530, right around there, so my position is slightly in the money. However, I'm willing to lose everything that I put in. I only put in a small position. However, I'm holding out for big gains. I'd like to see 10 times return on Bitcoin. That's about it. Small position there for me at least. I do think the trend now is bearish, though, so that's something to bear in mind. Okay, Canada yen. This position, as you see, big red candle on Friday, that took out my position. So the position was in the money a little bit, and I moved my stop to break even. I came back down, big red candle, took it out right there. So maybe I moved my stop to break even a little early, but however, if I didn't do that, it'd be a little bit of a floating loss. This position might still be valid, especially if you entered here at 93.93, right around there. It could still be in the money. Either way, though, I think there are other opportunities on the end. So I'm out of this at break even. That's not, of course, the preferred outcome, but it's also not a loss, so that's good. Aussie yen, so I just deleted that from my watch list. Aussie yen, this position I took half off here. When we saw signs of the doji at this resistance level here, I took half off. So I still have half the position on. My stop is at break even, so if price falls all the way back to 94.71, I'll be stopped out. I won't lose any money, but I'll be out of position there. And I'm still holding on until 96.45. Not going to be doing anything else, really. I took half off. That's from here. We'll just see whether it hits the stop or the target profit first. Okay, so that's Aussie yen. Pound yen. This position is still on, slightly in the money, almost at break even. However, I am seeing a bunch of signs of bullishness on the pound. Also, right now we have 1, 2, 3, 4, 5, 6, 7 candles. The past 7 candles, you can see this has been in a tight range, and these 7 candles in a very narrow range came after this big drop, and they're at a support level. So this to me looks like a great accumulation pattern. We have a course on supply and demand over on InformedTrades. Check that out for more on accumulation patterns and their impact, or how to use them in trading. Basically, anytime you see a tight trading range like this after a big drop or after a big rally, I think it's a strong sign of reversal, especially when it's occurring at support and the 50 simple moving average. So this position is only slightly in the money. I have not de-risked the trade yet. My stop is still here at 171.87. I entered at 72.72. However, I think the trade looks really good technically, so that's nice. That's encouraging, at least from my perspective. Dollar Canada. I think what happened on this trade, or did I even have this? Let me check my account log real quick. Dollar Canada. Yeah, Dollar Canada. I was stopped out on Friday, so that's obviously no fun. You can see I had gone short here, and big rally took me out here. I think with Dollar Canada, you know, and I had mentioned this on Friday a little bit, I probably should have looked for more confirmation with other pairs. I should have looked for more signs of dollar weakness and Canadian dollar strength. This was an isolated technical case, and I shouldn't have entered this trade. So this was a mistake. I learned the hard way, but sometimes that's that's the way you have to learn, or the way you'll remember. But really, the lesson for me is, you know, if I see a pattern I like, let me make sure that I'm seeing. If I see weakness in the U.S. dollar and Dollar Canada, I want to look for weakness in the U.S. dollar against the euro, pound, Australian dollar, New Zealand dollar, some other currency. And same principle with the Canadian dollar. If I think the Canadian dollar is going to rally against the U.S. dollar, is it rallying across the board? And if it is, those are the opportunities I really want to focus on. If it's not, maybe it's better to pass. That's something I've known intellectually, and I've gotten better at it. This was just a careless mistake on my part. Not that that's a good excuse, but I think I am making progress in making sure that each trade has confirmation and that the trends I'm participating in are broader trends across the board, not just in isolated to one specific currency pair. So I learned the hard way on that one, but you know, at least my stop was pretty tight. Of course, I've managed risk. So I lost 0.25% there, something I can bounce back from definitely. Okay, so that's Dollar Canada. I'm out of that trade now. Pound Aussie. Similar scenario here. We talked about the accumulation going on Pound Yen. Pound Australian dollar, I think it's something similar. We have a hammer off support here. I love that pattern. This is in a pullback and an uptrend. Pullback 61.8 line. Bunch of small candles here. Let's see. The position is slightly in the money now. However, the trade has not been de-risked. I'm waiting for price to cross the orange line, which is right at 81.20, right around there. If we can break above resistance there, at or above, I'll move my stop to break even. For now, just holding on to this this pair. That's Pound Australian dollar. What were the other orders I have on? So those are the 3 orders I have, or trades I have on that are in the market live: Aussie Yen, Pound Aussie, and Pound Yen. Oh, I should note, Pound Aussie, this one here, I de-risk this trade because I am long Pound Aussie. So yeah, I de-risked this trade. Yeah, okay. So I actually moved my stop to break even. And let's actually zoom in on the 4-hour chart. I should have. It's a good thing I mentioned that. It's kind of a major thing. I want to make sure I catch that. Okay, so I de-risked the trade here. So we're now about 45 pips above. But the reason for that is I felt a little uncomfortable. I'm long Aussie Yen. Right, so I'm long the Australian dollar, short the Japanese yen, and in this particular instance, I'm long Pound Aussie, which means I'm long the British pound and short the Australian dollar. So on one end, I'm going long the Australian dollar against the yen. Here, I'm going short the Australian dollar against the British pound. Like I mentioned, as I learned with Dollar Canada, I want to maintain greater consistency with my trades, with my currency pairs. So if I'm going long the Australian dollar, Aussie yen, I want to be looking for signs of Australian dollar strength everywhere else, and that type of thing. So here, because I have contradictory positions, I've just de-risked both of them. So my Aussie yen trade has been de-risked. My pound Aussie trade, I de-risked it a little prematurely, but if you recall in the videos I did last week, this was something I was preparing for. I said pound Aussie I might take profits on prematurely because I knew it was contrary to the Aussie yen position. But instead of taking profits prematurely on any of them, I took half off the Aussie yen. But outside of that, I've just de-risked both trades. So if price comes back down or goes against me in both directions, if it goes to my entry point, it's going to get taken out. Both the positions, Aussie yen and pound Aussie, are floating profits at the moment, small floating profits at the moment. Pound Aussie yen is a little bigger, so that's nice. But those are 3 trades I have on: Aussie yen, pound Aussie. Pound yen is the only one that hasn't been de-risked, so I could still lose money on that trade. But I really like the technical pattern on that, so that's nice. Now I did put on 2 orders today. One is for, actually not on this one, so let me delete this. Euro Kiwi, I was thinking about that because I like some of the patterns on the Kiwi, which we'll get to in a second. But let's go to pound dollar. Here, and this relates to, I'm seeing, strength in the British pound against the yen, against the Australian dollar. So I really like going long the British pound here, especially since I de-risked the Australian dollar trade. So if the British pound collapses, I'll lose on pound yen and pound dollar, but I won't lose on pound Aussie. Here, basically, it hasn't gotten filled yet, so I'm not in the market yet. But if you look at the daily chart, you see we've fallen back to the 50 simple moving average, which is near a support level. I'll zoom in a little bit. Here, I think we have a bunch of support there. My stop is kind of tight here. If you look at the 4-hour chart, you can see a little clearly. It hasn't gotten filled yet, but here's where I'm set to go long. I'm basically looking at this as the bottom of the range. Price collapse here, and I think we've seen signs that the market has put in a floor, especially this candle right here, July 25th. 4-hour, this might be the low. I think this could be a bullish checkmate. I don't think we'll break this low. That is at least the idea behind this trade. The trade will be proven wrong if we do break this low. I've got my stop here at 69.45, so I'm risking 40 pips and looking to gain 180. Target profit is resistance here. You see this is the recent high, so just expecting to go back there and see what that happens there. That's a reward risk of 4.5 to 1. This is a good target profit. If price goes there, it could go higher. But if price goes there, I think some sellers will come out, some people will be taking profits because there's an established resistance level established here, July 15th. Here again, July 4th, July 2nd. So well established. But let's see if this order gets filled. I'm set to go long at 69, what is that? 85. Okay. So that's pound dollar. And Kiwi Swiss was the other order I have on. If you look at it on the daily chart, basically with the Kiwi, we had this huge down day. Reserve Bank of New Zealand raised interest rates. That sent New Zealand dollar down quite a bit. You see this huge red candle, but it fell right back to support, and now we've had 2 candles in a row that are pretty narrow. So to me, that looks like accumulation is forming. The bears are exiting. They took their profits here, right in the support. And now there's resistance. Now there's some buyers stepping in to defend. The solid 50 simple moving average have the support level going back to May, and then here again in March. So well-established support level. I'm long here, 77.21. My stop is at 76.91, so just 30 pips. I'm looking to gain 150 as my target profit is the recent highs, the July 10th high, 78.21. 5 to 1 reward risk here. I really like the setup. Entering. When there's small candlesticks, you enter on the small candlesticks, you take your profit on the big candlesticks. That's sort of the simple idea. Here, big collapse right into support, small candlesticks, 50 simple moving average is right there. So we have a lot of signs of support. I'll enter there and see what happens. Okay, that's about it for the trades that I have on today. Any questions you have, anything you want to add, join us at InformedTrades.com. The new orders that I placed are also documented on my blog on InformedTrades.com. Best of luck in your trading, and we'll see you tomorrow. Take care.